Imagine a world where the internet melts. Seriously, not crashes, but literally melts.
Right.
Picture data centers, right? These huge digital brains of our modern world just shimmering with unbearable heat.
Yeah.
And inside, you've got racks of powerful GPUs, the real engines of AI, sweating like marathon runners after an Olympic sprint. I mean, there's silicon shimmering just on the verge of total thermal meltdown.
Right.
It's not just some, dramatic image. It's the very real existential threat facing our increasingly digital future. Think of it like a global sauna for silicon chips.
Yeah.
But with way, way higher stakes than just a good detox.
Well, while that scenario might sound perhaps a bit like the plot of a low-budget sci-fi B-movie for decades, and arguably even more acutely today, it has been a very tangible, very persistent problem for the foundational infrastructure of our digital lives. Computers, from the early mainframes right up to today's hyper-dense AI servers, they're all designed to process, analyze, compute at incredible speeds. And the byproduct of all that intense computational activity is, well, enormous amounts of heat.
Just tons of it.
Exactly. And unmanaged, this heat quickly leads to instability, performance degradation, and ultimately catastrophic hardware failure. The very brains of our digital age, if you left them unchecked, were literally overheating into oblivion, threatening, widespread digital blackouts.
Wow.
And then a solution, sort of a quiet revolution, emerged from a rather unexpected place. It really laid the groundwork for what we now understand as mission-critical thermal management.
So today we're taking a deep dive into the company that quite literally keeps the digital world chill, like preventing that apocalyptic melting scenario from actually happening. We're tracing their journey from, believe it or not, a humble garage in Ohio, all the way to the very heart of the world's most advanced hyperscale AI data centers. Talk about the silent infrastructure, the unsung heroes working tirelessly behind the scenes. Making sure your favorite streaming service doesn't just spontaneously combust mid-binge, or your critical online transactions don't vaporize into thin air. And, crucially, ensuring the complex AI models that are shaping our future can actually run without, self-immolating.
Welcome to the Deep Dive. This is where we sift through the noise to bring you the signal, the crucial insights you need to, truly understand the forces shaping our world.
Yeah.
Today, we're unpacking Vertiv Holdings Co. It trades on the stock market under the ticker VRT. Now, this isn't just a company that manufactures air conditioners. It's what we call a pure play on AI's thermodynamic limits.
Okay, pure play. What does that mean exactly?
It means they focus almost exclusively on this one critical high-growth sector, managing heat and power for advanced computing. Their technology provides the literal cool down that prevents the digital age from, boiling over. A function that has become not just important, but absolutely vital as AI models demand increasingly dense, power-hungry, and ultimately heat-generating hardware. Without companies like Vertiv, the entire AI revolution, the cloud itself, simply couldn't exist as we know it.
Wow. Okay, so our story, like so many truly impactful innovations, starts with a moment of frustration, right? A flash of insight, and probably a lot of late-night tinkering. The year is 1965, the setting, Columbus, Ohio, and the time, get this, 2 a.m.
Specific.
Very specific. Now, you might be thinking, what on earth could be happening at that hour in some suburban garage? Well, Ralph Liebert's neighbors, they certainly had their theories.
Oh, I bet.
They reportedly thought he was secretly building a drag racer in his garage.
Your drag racer, okay.
And frankly, with all the strange noises and the late-night lights, who could blame them? Maybe he was just really into late-night tinkering, or perhaps, in a stroke of improbable foresight, his garage had surprisingly good Wi-Fi for 1965, letting him pull all-nighters on his designs.
Unlikely, but a nice thought. He was clearly a man ahead of his time, though, with a vision that went way beyond the usual suburban nocturnal hobbies. He was looking at a fundamental, rapidly escalating problem that, honestly, few others even recognized yet.
In truth, Ralph Liebert wasn't building a drag racer. He was, in fact, inventing the planet's first precision air conditioner specifically designed for computer rooms.
The first one?
The first. He'd witnessed firsthand the immense, concentrated heat generated by the nascent computing machines of the era. These early IBM mainframes, they were colossal, power-hungry beasts.
Yeah,
And he described seeing them, quote, glow like angry toasters.
angry toasters. I love that.
Now, a toaster isn't typically associated with anger, but that vivid analogy, it perfectly captures the extreme thermal stress these early computers were under. These machines were generating so much heat they became unstable, prone to errors, frequently broke down. It limited their operational time, their reliability.
Yeah, you can't have that. It was like trying to run a marathon in a winter coat during a heat wave, just inefficient, dangerous, and utterly unsustainable for continuous long-term operation. The problem wasn't just general heat, it was uncontrolled, localized heat. That led to instability and frequent, costly breakdowns that crippled these invaluable early computing assets.
Okay, so the moment of truth comes, right? When IBM engineers in Chicago finally crank up Ralph's prototype, what happened?
Well, the result was instantaneous and profound.
Yeah.
The computer room stopped sweating.
Just like that.
Just like that. Imagine the relief for those engineers. Suddenly, these massive temperamental machines, which had been prone to random failures and forced shutdowns due to overheating, could operate reliably for extended periods.
Finally unlocking their potential.
Finally unlocking their true computational potential. The impact was immediate. They were so impressed, they whisked him away to the World Computer Conference, a major platform for innovations like this, and orders just snowballed.
Talk about a cool reception. Sorry, I had to.
Indeed. It was the kind of rapid success story legends are made of, propelled by a clear, urgent market need and an ingenious, perfectly timed solution.
And just like that, Liebert Corporation was born, with one remarkably clear and urgent mission: keep the digital age from melting. Which honestly still sounds like a job description for a superhero, not just an HVAC guy.
Perhaps, but that's precisely what Ralph Liebert turned out to be for the nascent computing industry, a quiet, thermal superhero who enabled the very dawn of the digital era.
Okay, so fast forward a couple of decades. We're in 1987 now.
Right.
The computing landscape obviously has evolved dramatically. The need for sophisticated power and cooling solutions, it's only grown exponentially.
Immensely. It wasn't just mainframes anymore. It was the dawn of the interconnected world.
Right. Enter Emerson Electric. Describe them for us.
Emerson Electric. A sprawling 100-year-old industrial colossus that, as our research indicates, appeared to collect, quote, mission-critical gizmos the way others collect stamps.
Okay. An eclectic hobby for a giant corporation.
A rather eclectic hobby, I must say, given their vast and diverse portfolio. But it highlights their strategic intent, perhaps, to acquire foundational technologies. They clearly saw the strategic value in Liebert's expertise and technology.
They knew what they were doing.
They recognized the increasingly foundational role it played in the rapidly digitizing world. So they bought Liebert, and they folded it into a new, larger entity called Emerson Network Power.
Okay.
This integration meant Liebert's specialized thermal solutions were now part of a broader suite of infrastructure offerings designed to power and protect the rapidly expanding global network.
So for the next 2 decades, this Emerson Network Power Group, they basically became the silent pit crew of the internet.
Right? That's a good way to put it.
Think about their impact. Powering the burgeoning telco switches, connecting calls and data globally, bolting advanced chillers onto Wall Street trading floors, making sure billion-dollar transactions didn't fail because the servers got too hot.
Critical functions.
Totally. They were essentially the invisible backbone, making sure nobody learned the hard way what a blue smoke failure truly meant.
Which is never good.
No. And just for clarity, in tech talk, a blue smoke failure refers to like the catastrophic and often literal burning out of electronic equipment. Usually comes with smoke, a really nasty smell. Because nothing says, oop, quite like blue smoke pouring out of your server rack.
Precisely. They were the unsung heroes enabling the dot-com boom, the explosion of mobile communication, the foundational infrastructure that allowed the internet to truly flourish without literally burning down. Their work was absolutely critical, yet largely invisible to the end user. Taken for granted, really.
Yeah, absolutely.
Then, in a pivotal strategic move, one that likely raised some eyebrows back then, in 2016, Emerson decided its data center arm was, quote, too niche.
Too niche, after all that, for the company that collects mission-critical gizmos.
The irony, as you pointed out, is palpable. This division, which had been so fundamental to the internet's explosive growth, suddenly deemed a non-core asset. It was a strategic decision by Emerson to streamline its portfolio, focus on other areas, but for those within the division, it must have felt like a sudden, jarring shift in identity.
I bet. So what happened?
That's when the private equity daredevils at Platinum Equity swooped in, armed with a hefty $4 billion check. It was an Operation Insiders codenamed Project Tiger.
Project Tiger. Sounds dramatic.
Their arrival was anything but subtle. They literally, quote, ripped the Emerson logos off the buildings over a weekend.
No way. Over a weekend.
Apparently, talk about a swift, decisive breakup. It was a clear signal of complete detachment, a corporate divorce in the most literal sense, leaving no doubt about the new entity's independence and forcing it to forge a completely new identity.
So this newly orphaned company gets christened Vertiv, which is, we're told, a mashup of vertical and active.
Correct. The intention was to signify its focus on vertical markets and active solutions for critical infrastructure.
Okay, but how did people react? Employees?
Yeah.
Competitors?
Well, as you can imagine, employees were initially bewildered, facing uncertainty about their new corporate identity, their future under private equity ownership. Competitors, meanwhile, often sneered, openly thinking, PE will strip it for parts, predicting a quick asset strip and sell-off.
Ouch. A lot of skepticism.
The skepticism was thick in the air, a potent mix of doubt and derision. The instability was apparently so pronounced that the first CEO even bolted after a mere 18 months.
18 months? That doesn't exactly instill confidence.
It certainly did not help instill confidence in the fledgling standalone company. Cue ominous violins, indeed. It was, without a doubt, a rocky, uncertain start for a company now trying to find its own footing and define its purpose in a rapidly evolving, highly competitive market.
Okay, so just when Vertiv is trying to find its new identity, try to stand on its own 2 feet, the unthinkable happens. COVID erupts in 2020.
Right.
And this period sounds like it was a real double-edged sword for the company. On one hand, data center demand just soared, right? Exploded beyond all projections.
Correct, because everyone went online. Remote work, streaming, online education, telehealth, the digital world became our absolute lifeline.
Which should have been amazing for Vertiv, given their whole mission.
It should have been. But simultaneously and catastrophically, global supply chains completely imploded.
Oh, man.
Raw materials became scarce, shipping routes were snarled, factories faced unpredictable shutdowns, labor shortages. It was a perfect storm. Unprecedented opportunity colliding head-on with unprecedented chaos. Demand was sky high, but the ability to deliver was severely constrained.
That sounds like immense pressure, especially for a newly independent company.
Existential pressure, really. It led to a truly dire financial situation.
How dire are we talking?
Well, the financial consequences of that perfect storm were indeed severe. Vertiv's stock price dove to a shocking $3.50.
$3.50. Wow.
This wasn't just a dip. It was what our source eloquently calls a zombie zone valuation, signifying that the market had essentially written off the company as a viable long-term investment.
Oof. Zombie zone.
It reflected profound investor skepticism and the brutal, almost crippling impact of the supply chain disruptions on their ability to fulfill orders. For a company that had just been spun off, this near-death experience for the stock was a true test of its resilience. It wasn't just stressful for investors, it was a crisis for everyone involved. The very foundation of their business was under severe duress. The future of Vertiv hung precariously in the balance.
But just when things seemed darkest, like out of a movie, a new kind of hero emerged. Not from the shadows, but from within the company itself. Enter Giordano, Albertazzi.
Oh.
Now, this isn't your typical suit and tie CEO, right? He's described as a Bologna-born engineer, a vintage Alfa Romeo mechanic, which tells you he appreciates precision engineering, getting his hands dirty.
Well, right.
And, delightfully, an occasional rock drummer.
A rock drummer CEO. You don't see that every day.
No. He sounds less like a CEO and more like the coolest guy you'd meet at a car show or maybe fronting a garage band. But make no mistake, beneath that unconventional exterior was a company lifer. GL had spent 25 years inside both Liebert and Emerson, running their critical operations in EMEA and the Americas.
So he knew the business inside out.
Totally. He understood the business, the technology, the people. And his creed, simple yet terrifyingly profound, became the rallying cry for the turnaround. We cool the cloud. If we fail, the internet melts.
Simple, direct, terrifyingly clear. A succinct articulation of their absolutely mission-critical role.
Exactly. So what did he do?
Well, Gio didn't just inspire, he acted decisively, and with remarkable foresight. He recognized the seismic shift happening in data centers, particularly with the escalating power demands of AI. He understood that traditional air cooling, the workhorse for decades, was rapidly reaching its thermodynamic limits.
Well, it just wasn't enough anymore.
Precisely. So he bet big and early on liquid-to-chip cooling. This was a bold move, required significant investment, a leap of faith, but he saw it as the only viable path forward for the high-density computing AI demanded.
How did he convince people?
To convince skeptics, both internal engineers resistant to change and external investors wary of risk, he didn't just present data, he conducted a legendary demo.
Oh, yeah. Tell me about the demo.
He showed off their technology, chilling a massive 142 kilowatt rack, an immense heat load, while he calmly sipped an espresso.
While sipping an espresso, that's amazing.
Presumably, the espresso was still warm, showcasing his calm under pressure and an impressive ability to multitask while demonstrating groundbreaking technology. This wasn't just a technical demo, it was a masterclass in confident visionary leadership, proving the efficacy of their solutions in a tangible, memorable way.
Wow. That demo and his conviction must have really turned the tide.
It absolutely did. Gio didn't just wait for customers to come to him. He took the fight directly to the front lines of innovation. He even personally handed NVIDIA's CEO, Jensen Huang, a titan in the AI chip industry, a prototype of Vertiv's cooling solution.
He just walked up to Jensen Huang.
Apparently, with the legendary line, quote, "Your GPUs are genius, let us mop the sweat."
Less of mop the sweat. I love it. That takes guts.
That kind of direct, confident engagement signaled Vertiv's deep understanding of the bleeding edge of computing and their commitment to solving its most pressing problems. The result: orders ignited, production ramped up, margins thawed from their frozen zombie zone state. And as our source vividly puts it, the zombie jolted back to life.
Yes. The zombie lives.
The market responded, recognizing the critical, indispensable role Vertiv would play in the burgeoning AI era. And in January 2023, Gio officially got the captain's hat, taking over as CEO.
And now analysts watch his espresso intake.
Indeed. Analysts now keenly observe his unique leadership quirks. He reportedly measures strategy sessions by espresso shots. 3 for steady, business as usual, 4 for new product development on the horizon, and 5 for brace for an acquisition.
Okay, so if you see Gio with 5 shots of espresso, run straight to your broker. Something big is brewing.
Precisely. Something significant is definitely brewing.
Okay, so the story of Vertiv's journey, from the brink of digital meltdown during the pandemic to a financial powerhouse today, it's just remarkable. A testament to leadership technology.
Bold leadership and indispensable technology, yes. Now let's look at the numbers that truly tell Vertiv's current story, showcasing how their operational improvements, that strategic pivot to AI infrastructure, and impeccable market timing have translated into truly impressive financial performance.
Let's see them.
These aren't just abstract figures. They represent a fundamental shift in market perception and underlying business strength, moving the company from a perceived niche, traditional industrial player to a critical, high-growth enabler of the digital future.
And what numbers they are. As of our latest data, Vertiv's market cap now stands at a cool $49.9 billion, with the share price hovering around $130.38.
A significant figure.
Think about that. That's a whopping plus 39% year-over-year increase in share price. A dramatic recovery for a company trading at $3.50 just a few years ago in that zombie zone.
It is a dramatic validation.
This kind of explosive growth isn't just impressive, it's testament to the huge, sustained demand for their solutions and the market recognizing their indispensable role in the accelerating AI infrastructure build-out. It really highlights that shift from industrial company to tech enabler, like you said, a true pick-and-shovel play on the AI gold rush.
Diving deeper into the operational financials, Vertiv's revenue hit a robust $8.01 billion in 2024, and they continued that momentum into Q1 2025, reporting $2.84 billion. That represents a substantial plus 24% year-over-year surge.
24%.
But what truly sets them apart is their compound annual growth rate, their CAGR. It has been an impressive 17% since 2021.
Okay, 17%. How does that compare?
Well, to put that into perspective, this significantly outgrows many diversified industrial peers who are often seeing growth rates below 10%. This sustained high-rate growth truly sets them apart, underscoring their direct leverage to the booming AI market and the increasing density of data centers.
Got it. And what about profitability?
Let's talk profitability. Their EPS, earnings per share, is $1.71 on a trailing 12-month, or TTM, basis, with a forward estimate of $4.40 for 2026.
440. Wow.
That's a remarkable plus 66% TTM increase in EPS, demonstrating not just top-line revenue growth, but substantial improvement in their bottom-line profitability and operational efficiency, strong cost control, high-value product mix.
Okay, impressive growth, impressive profits. What about valuation, that PE ratio?
Right. When we look at their market valuation, their price to earnings, or PE ratio, is 74x TTM, which, while appearing high, is actually compressing from 86x in 2024. Forward estimates land in the more reasonable 29-36x range.
Still sounds a bit high compared to the sector.
It is still above the sector median of 25-30x, yes. But this premium is arguably justified when you consider their margins. Vertiv boasts best-in-class margins in the thermal niche. A gross margin of 36%, operating margin of 17%, and a net margin of 8%.
Okay, those are strong margins.
They're not just growing revenue, they're growing profitably. And that's a key differentiator. It's like they found a way to not just chill the servers, but also their balance sheet, optimizing operations for maximum efficiency.
Nice.
These strong margins indicate significant pricing power due to their specialized tech, robust efficiency, and valuable product mix. All crucial for justifying that premium valuation and signaling sustained financial health.
And their debt situation. How leveraged are they?
Furthermore, their financial foundation remains remarkably solid, especially for a company growing this fast. Their debt-to-equity ratio, a key indicator of financial leverage, stands at a stable 1.2x.
1.2. How does that stack up?
This is actually below even some larger peers like Eaton, which has a 1.4x ratio. This healthy structure isn't over-leveraged, providing a strong, flexible foundation for continued investment in R&D and strategic growth.
Good to hear. And the backlog, I heard it was big.
Perhaps one of the most compelling indicators of Vertiv's future performance and stability is their record backlog. In Q1 2025, their backlog reached an astonishing $7.9 billion.
$7.9 billion. What does that mean in practical terms?
It provides an incredible 18 months of revenue visibility, offering a clear runway for sustained growth, and represents a massive plus 40% year-over-year increase.
18 months of visibility. Wow.
This robust, growing backlog acts as a powerful buffer against potential market uncertainties and signals robust, continuing demand for Vertiv's critical infrastructure solutions. It effectively de-risks their near to midterm revenue outlook, a powerful validation of their market position and sustained sales momentum in a hyper-growth sector.
Okay, let's switch gears. Let's talk about the cutting edge where Vertiv really sets itself apart technologically.
Right.
The demands of modern AI, they've just fundamentally reshaped data center architecture, haven't they?
Completely. AI server power densities, the amount of power consumed and heat generated in a confined space, have absolutely exploded.
How much?
Our research indicates they've tripled since 2023 alone, now exceeding 100 kilowatts per rack.
100 kilowatts per rack. That's insane heat.
To put that into perspective, imagine the immense heat from dozens of high-end gaming PCs, all running full throttle, crammed into a single closet. Traditional air cooling, the standard for decades, just can't keep up.
It's like trying to cool a supercomputer with a tiny desk fan, right? Or maybe an ice cube in a blast furnace.
Precisely. Your personal gaming PC might have a few fans, but AI GPUs are sweating like they just ran a marathon in a fur coat.
Yeah.
They demand a fundamentally different, far more efficient approach to thermal management.
And this is where Vertiv steps in. Not just with better fans, but a whole new approach.
This is exactly where Vertiv's proclaimed liquid-to-chip supremacy truly comes into play. Their Liebert XDU and XDM product lines are specifically engineered for these extreme power densities.
Okay, liquid to chip. How does it work?
Unlike air cooling, which moves large volumes of air, liquid cooling directly transfers heat away from the hottest components. This direct contact with the chips themselves makes it incredibly efficient, delivering about 30% energy savings versus traditional air cooling. And critically, it can handle an astonishing 142 kilowatts per rack.
142, that's huge.
This direct-to-chip method is far more effective at removing heat right at the source, where the most intense thermal loads occur. But beyond just the cooling units, Vertiv offers a comprehensive end-to-end stack of solutions.
End-to-end meaning?
Meaning they provide everything, from power solutions like UPS, uninterruptible power supplies, basically giant batteries for backup power and switchgear, which manages the precise flow of electricity. They also provide the physical racks themselves, a capability boosted by their recent $200 million Great Lakes Data Racks and Cabinets acquisition.
Ah, so they bought a rack company. Makes sense.
And to tie it all together, they offer their Copilot predictive maintenance software, which has been adopted by 60% of the top 100 data centers, showcasing the integrated approach and commitment to proactive operational stability.
And it's not just about their internal stuff, right? They're big on partnerships too.
Incredibly strategic about partnerships, yes. Vertiv isn't doing this alone. They've been proactive in forming key alliances and engaging in crucial joint innovation projects with industry giants. For instance, they're working hand-in-hand with NVIDIA on their Cooler Chips platform, directly addressing the thermal challenges of the world's most powerful GPUs, the cornerstone of AI. They're also collaborating on Microsoft Azure Modular pods designed for rapid deployment and scalability, critical for hyperscalers expanding globally.
So they're working directly with the biggest players.
These partnerships underline Vertiv's strategic importance. They're basically the cool kids of the data center, making sure everyone else's innovative tech doesn't literally overheat. It's a testament to their foresight and technical prowess that they are embedded in these critical development cycles.
Okay, and then there's this Oklo pact. That sounds futuristic.
And here's where it gets truly fascinating, perhaps even a bit futuristic, and certainly a potential game changer. The Oklo Vertiv Pact, announced July 23, 2025.
Tell me more. SMRs.
This groundbreaking agreement takes Vertiv beyond just cooling. It bundles carbon light power from small modular reactors, or SMRs, with Vertiv's advanced cooling for AI halls. SMRs quickly are advanced nuclear reactors, smaller, more flexible, inherently safer than traditional plants, allowing deployment closer to demand centers.
Nuclear power for data centers.
Yeah. If proven economical and scalable, this partnership could fundamentally reshape how hyperscalers power their facilities, addressing both massive energy consumption and their increasingly scrutinized carbon footprints. It's a truly novel energy plus thermal bundle that could cut both operational expenses and carbon emissions, offering a sustainable, self-sufficient data center model.
That sounds huge, like solving the energy and the cooling problem.
It positions Vertiv not just as a cooling provider, but as a key enabler of green, high-performance computing, tackling one of the biggest challenges facing the industry: clean, reliable, abundant power. Furthermore, to protect these innovations, they have a serious intellectual property, or IP, moat, with 45 thermal patents granted in 2024 alone.
45 patents just last year.
They're not just innovating, they're vigorously owning it, solidifying their competitive advantage for years to come.
Okay, wow, that's a really compelling bullish case. Remarkable turnaround, rocketing financials, indispensable tech.
It is quite compelling.
But now it's only fair and definitely crucial that we pull up a chair at the Bear's Bistro and prepare to roast some risks.
The counter-arguments.
Because every silver lining has a cloud, right? And in the world of high-flying stocks, you got to consider the headwinds. So I hope you brought your oven mitts, because this segment is going to be hot. What could potentially dampen this growth story?
Well, one significant risk that surfaced quite dramatically recently was the competitive threat of insourcing. Specifically, that mid-July 2025 news of AWS unveiling its own in-row liquid exchanger.
Right. Amazon making their own stuff. That sent the stock down, didn't it?
It sent Vertiv stock on a flash drop, yes. The market clearly had a meltdown at the thought of a major hyperscaler like AWS developing its own internal cooling solutions, potentially reducing reliance on suppliers like Vertiv. The reaction showed the market's sensitivity.
But was it an overreaction?
Analysts were quick to call the sell-off overdone. And Vertiv counters this perceived threat with several strong arguments. Deeper integration into customer ecosystems, offering a full solution stack beyond just one component, and superior speed to market.
So AWS might make part of it, but not the whole integrated system Vertiv provides.
That's the argument. Can AWS truly replicate Vertiv's global scale, end-to-end expertise, and rapid deployment capabilities across every data center worldwide? Vertiv argues they're not just playing defense, they're cooling the offense with comprehensive, rapidly deployable solutions that are incredibly hard for even the biggest tech giants to fully replicate entirely in-house across their diverse global footprint.
Okay, that makes sense. What other risks are lurking?
Another area of ongoing concern, really for many complex manufacturers, is supply chain vulnerabilities.
Oh yes, the supply chain strikes again.
Well, there was some good news that Q1 2025 DOJ supply chain probe settled for $85 million, clearing a significant overhang, which was positive. The core issue remains. Any significant tightness or disruption in key raw materials like semiconductors or industrial-grade copper would still inevitably squeeze Vertiv's margins. These are critical components, and global supply chain disruptions have proven persistent, unpredictable challenges.
Yeah, you wouldn't want their profits to fizzle out because they can't get parts. Sorry, another pun.
It is a perpetual balancing act for any manufacturing company, especially one operating at the scale and speed required by the rapidly expanding data center industry.
Okay, supply chain, what else? Valuation.
Then there's the perennial concern about valuation and broader macroeconomic risks. Vertiv's valuation, as we discussed, is undeniably demanding. That forward PE of 2936x compared to a sector median of 2530x.
Bears will jump on that.
Bears will naturally point to this premium and argue future growth is already priced in. Additionally, they will keenly watch for any macro pause in capital expenditures or CapEx by hyperscalers. If global economic conditions tighten or the pace of AI build-out slows, even temporarily, Vertiv could certainly feel the pinch.
So if the big cloud companies stop spending as much.
Exactly. Essentially, if the broader market gets a chill, Vertiv might feel it too, given its sensitivity to large-scale infrastructure investments that are often cyclical. These external economic factors are always a wild card.
Okay. Valid concerns. Competition, supply chain, valuation, macro risks. But how worried should we really be?
Well,
I mean, despite these valid concerns, with that record $7.9 billion backlog giving them 18 months of visibility and a caffeinated CEO measuring strategy by espresso shots, it really seems Vertiv is perfectly cool with these challenges. Last pun, I promise. They've shown amazing resilience, pulling themselves back from the brink. Their current pipeline suggests not just continued strong performance, but a deep moat protecting them. It's a company that's learned to thrive under pressure, turning meltdowns into growth.
they have demonstrated significant agility. Now, we've heard about Gio Albertazzi's legendary espresso habit and his unique leadership style, instrumental in this turnaround.
Yeah, the rock-drumming, Alfa Romeo fixing CEO.
Precisely. Now, thanks to the magic of advanced voice cloning technology, we have the opportunity to get some exclusive voice-cloned insights directly from the man himself.
Ooh, okay. Let's hear from fake Gio.
This allows us to hear his thoughts on some pressing questions. As he measures strategy by espresso shots, his answers here will be concise, impactful, and to the point.
Got it. Okay, first question for the voice clone Gio. Vertiv is often called a pure play on AI data center plumbing. What does that really mean for the future of the company, and why is this specialization so vital?
It means we are indispensable. AI servers, particularly GPU clusters, are thermodynamically intense. We provide the precise power, cooling, and monitoring that allows them to function optimally. We are the foundation, the mission-critical infrastructure that enables the AI revolution to actually run without melting down. It's about enabling the next generation of computing.
Indispensable. A powerful word. And he hits on a crucial point. The sheer physicality of AI. It's not just code. It's massive hardware generating immense heat. His point about enabling the next generation of computing really underscores Vertiv's foundational role. It isn't a luxury, it's a non-negotiable requirement. They're the physical guardians of the digital future.
Absolutely. Okay, Gio, you championed liquid-to-chip cooling really early on, almost before the market fully got it. How does this specific tech continue to give Vertiv such a significant edge against competitors, even maybe those in-house efforts from AWS?
Our edge is not just technology, but integration and scale. We've been doing this for decades. Our Liebert XDU systems deliver significant energy savings and handle extreme power densities up to 142 kilowatts per rack. While others may dabble, we offer an end-to-end patented solution from power to rack paired with predictive software. We move with speed and scale.
That concept of integration and scale is critical. It's not just having one good component. It's the entire seamlessly integrated system power, cooling, racks, software. This comprehensive, vertically integrated approach, plus decades of experience, makes it incredibly difficult for even a giant like AWS to replicate Vertiv's full solution globally with the same speed and efficiency. It's the whole ecosystem.
Speed and scale, yeah, definitely paramount. And the Oklo SMR pack, truly intriguing, really forward-thinking. How significant do you see this zero-carbon power initiative for Vertiv's long-term strategy? What specific problems does it solve for those huge hyperscalers?
It solves two critical problems for hyperscalers, the escalating cost of energy and the imperative for sustainability. By pairing our thermal solutions with carbon-light small modular reactors, we can offer a truly integrated, self-sufficient, and environmentally responsible power and cooling bundle. This is the future of data centers' clean energy efficiently delivered.
He succinctly articulates the two biggest pain points: energy cost and environmental impact. The genius of the Oklo pact is offering a solution to both simultaneously. SMRs provide stable, consistent, virtually carbon-free power. Bundled with Vertiv's cooling, it creates a self-sufficient data center microgrid. This could allow deployment in new locations, reduce reliance on grid power, and help achieve sustainability goals. It's truly visionary, positioning Vertiv at the forefront of sustainable infrastructure innovation.
Visionary is right. Okay, finally, Gio. Record backlog, ambitious growth.
Yeah.
What truly keeps you up at night as CEO? And on the flip side, what excites you most about Vertiv's trajectory?
What keeps me up is ensuring our supply chain remains robust to meet this unprecedented demand. What excites me truly is our position at the thermodynamic limits of AI. We are not just selling equipment, we are enabling the digital future. We are saving the planet while printing money, as I like to say. The potential is immense.
His concern about the supply chain is very pragmatic, highlights the real-world operational challenges of scaling, shows focus on execution. But his excitement, that phrase, saving the planet while printing money, it's blunt, but perfectly encapsulates the dual appeal. They're positioned at a crucial bottleneck, the thermodynamic limits of AI. As AI gets more powerful, Vertiv's solutions become even more critical, ensuring continued relevance and immense growth potential. They are quite literally enabling the compute that drives our digital world.
Well, there you have it. Vertiv is clearly not the unsexy plumbing shop spun out of Emerson anymore. It's transformed into the indispensable pick-and-shovel pure play, riding the thermodynamic limits of AI, enabling the whole revolution.
A remarkable journey.
Totally. Their journey from garage invention to global leader in critical infrastructure is just amazing. Resilience, innovation, leadership. For investors, this really presents a compelling growth at a reasonable premium or JARBR story for long-term AI infrastructure exposure. A unique way to play the AI revolution without betting directly on volatile chip makers.
Consider this. Every time a gamer streams, a trader clicks buy. An AI model dreams. Somewhere, silently, diligently, a Vertiv system is quietly hissing and humming, regulating temperature, ensuring power, keeping that digital heartbeat going.
Yeah, that silent symphony.
It's a constant silent symphony of cooling and power underpinning our interconnected world. This deep dive into Vertiv, often unseen but fundamentally indispensable, raises a broader, provocative question for all of us. What other, deeper, often invisible infrastructure is quietly enabling your entire digital life right now that you might not even be aware of?
Good question. The world we live in is built on these foundational, often hidden technologies.
Indeed it is.
So if you want to keep your knowledge base chilled and your curiosity bubbling, make sure you're subscribed to the Deep Dive. We're always unearthing these hidden stories behind the companies and technologies really shaping our world, giving you the insights you need.
Subscribe to Theta Fuse, where we chill the hottest stocks.